All right. All right. Hey,
Right.
yeah,
What's
man.
going on?
Hey, man. Peace and blessings, everybody. It's your brother Atum in the building with the
And the
Don.
Dawn.
With the Don. And, we have a whole new series of information that we are looking forward to bringing forward to the people. We know that there has been a lot of excitement, education, and misinformation surrounding the whole cryptocurrency market craze,
To the moon.
trend, or whatever you want to call it. And so, that's one of the main reasons why I have teamed up with the Don that is going to help bring you some entertaining and educational information because y'all know that's all I'm about is entertaining and educating. So man, in case anybody don't know me, I'm Sen's brother Atum Ra, curator of Melanated and Illuminated, and a whole litany of other brands. But one of the ones I'm most proud of now is um, I get to sit alongside the Don, what I'm saying, with the crypto Don as we help our people in this new wave of this transference of wealth that's going on right now. So, man, Don, man, why don't you go ahead and introduce yourself, bro? You know what I'm saying? Let
Man,
them know
look,
who you is, man.
I'm gonna keep it real simple for you. I go by the moniker of just a simple trader. That's it, man. I study the markets. I'm an economist, or let me say, let me better rephrase that. Sorry, I have not got my degree in economics yet. Still working on that. I am wanting to go to Finland so bad. I've already been accepted to the school in Helsinki to learn the type of economics that I want to learn, but COVID-19, so I'm kind of stuck
Mm-hmm.
here. But yeah,
Stuck in
trader,
America. Stuck
know
in
my
America.
economics. I love talking about money. I love talking about how to actually profit off of these markets because it is no surprise to you guys that the systems that we have locked up the ability to gain wealth in a system of lies and deceit. And I use what I learned to bring to you guys to hopefully give you guys enough knowledge to overpower the systems at B. So that's it. Simple trader. That's me. We do have a beginning video for you guys. Uh, we are going to start off with cryptocurrencies and then we're going to move into some other things here. But we have a very insightful video for you guys. I don't want this video to turn you away from cryptocurrencies. I just want this video to give an acknowledgement of what the governments have in store for cryptocurrencies as they move from a dollar based, or let me say a fiat or paper dollar based system into more of a digital cryptocurrency, or as they call it, a CBDC, central bank digital currency system. So, Atum, if you can go ahead and play
Yeah.
that video.
Yeah, man. And just to set it up, and in case you didn't hear, several weeks ago, there was an attack on a pipeline. And yeah, I use attack because y'all know I'm the residential conspiracy theorist. But there was an attack on a pipeline, and the company ended up paying the hackers the ransom in Bitcoin. Which of course, has been the tool for a lot of people trying to get ransom or holding things hostage. And so recently there has been a break-in development about that story and what the feds have done in retaliation to that situation. So I'm gonna go ahead and pull that up so that you can check that out. Let's see. Here we go.
To use an overused word, of this episode is going to be for cryptocurrencies generally and for Bitcoin in particular, if law enforcement agencies or intelligence agencies can effectively crack the code.
Oh,
Yes, and thank you for having me.
let me start this from the start.
Use an overused word, of this episode is going to be for cryptocurrencies generally and for Bitcoin in particular, if law enforcement agencies or intelligence agencies can effectively crack the code.
Yes, and thank you for having me. I think what people need to recognize is that Bitcoin is the greatest thing to happen to the FBI. It's the most transparent form of money transfer available. The hack would have happened regardless, except the hackers would have had to probably wait for T+1 settlement on a traditional wire. So I think the misconception in this instance is around, is the Bitcoin network hacked, or is centralization an issue, or is decentralization real? And it's really just a failure, and fortunately a failure on the hackers' side of private key management, which is something that the crypto industry takes very seriously. And it certainly shouldn't tarnish the reputation of crypto. The reality is the FBI works with companies like Chainalysis, blockchain analytic firms. The New York Detectives Unit works with them. I have friends that are detectives that work with companies like Chainalysis. It's an extremely useful technology, and Bitcoin is quite literally the best form of ransom payment for federal agents.
So let me turn to Eamon. Do you agree with what Michael just said, that this is a kind of blessing in disguise for law enforcement, number one, and number two, there's obviously a kind of cat and mouse factor at play here. In other words, with every forward step law enforcement takes, the mouth.
And let me just pause this for a minute. In case you don't know what's going on, like we talked about earlier, how the hackers were paid in Bitcoin, it's come out that the FBI has been able to recover some of that Bitcoin. So, just to give y'all a little bit in case you were lost.
Factors are going to take a step forward. They're going to learn from what the FBI did and harden up their defenses. Then the FBI comes back again. So we're in not an arms race, but we're in a competition of sorts, right?
Absolutely, Tyler. The cat and mouse is never going to end, right? I mean, that thing between bad guys and good guys will go on forever. But nobody here should be surprised that Bitcoin is traceable by the federal government. I mean, it's a public ledger, right? The blockchain is public. I had the exact address of the wallet where this money went. That was knowable information for just about anybody who knows anything about how all this works, right? So that's not surprising. What's surprising is that the FBI was able to pull this off because they were able to retrieve that money and that the hackers here hadn't moved it to some place where that money was ungettable by the FBI. That is, put it into a crypto mixer and then gotten it out of a crypto ATM somewhere in some country that is not susceptible to U.S. law enforcement, some Russian jurisdiction or the like. That is what I think the real mystery is here. How come the hackers weren't able to move those funds and get them, or at least a big portion of them, offshore to some place where they could be out of the reach, the long arm of the law here in the United States? And I don't think we have the full answers to that just yet, but nobody should be surprised that Bitcoin itself is traceable by law enforcement.
Exactly.
All right, you can cut it there.
Are looking at things like Monero or other, options.
All right, so you guys heard it. I am going to let Atum go ahead and take it with this one because I'm pretty sure he has some questions that he doesn't about when it comes to crypto, and I'm going to go ahead and answer them for him.
Oh yeah. I got a lot of questions because like when it first came up, I'm like, man, so these companies and government just got crypto on tap. I'm wondering now, how we talk about Fort Knox and everything else like that. I'm wondering what this government Bitcoin reserve is looking like. Now, I mean, me personally, first of all, I was skeptical on the whole situation, just from the beginning. When we talking about, because apparently it hit, and then, if you were watching the news, you saw all these different shortages on the East Coast. I saw people putting gasoline in trash bags and all this other crazy type of stuff. And so, it seemed like something to kind of drive the market, a self-fulfilled shortage. But, taking my tinfoil hat off, the first question I have to you is like how does this even start with a major company that more than likely doesn't have, or may have, but let's just assume they don't have any cryptocurrency assets? How are they able to get, because I think it was like 4 million in cryptocurrencies. How does that start when you're a company?
Well, let's take it back to the beginning, right? And when I say the beginning, I mean the actual beginning in terms of the new administration, right? So when we look at when the administration was coming in, when it comes to cyber attacks and I guess we can quote unquote say cyber warfare, if you want to think of it in that terms, they were already starting to write and put out legislation around the procedures that they would follow if a cyber attack was to come. So we had all of these new laws pop up around national interest. That would say if these national interests got attacked in a certain type of way, that the government had a certain procedures to act upon to, number one, solve the issue and to also recover the Bitcoin as they did in this type of way. Now, the company in question, Colonial Pipeline, is one of the biggest oil I don't want to say producers, but oil transported right on the East Coast, right? They recently had, as far as today, they've been called to the House or to the Congress to answer questions, and it turns out that these guys, this company, didn't have anybody there that knew how to manually operate the pipes. Okay, so this is saying that if they're digitally attacked, they have no analog means of actually solving the situation. So that kind of draws suspicion right there. And of course, you also have to bring into the fact that the government was already setting on laws. What I like to say is problem, reaction, solution. Right? We had the problem. They were already coming up with this. We had the problem. We had the reaction, and they already had the solution right there. They were just waiting to sign it into law. This is the case with a number of bills that you see coming out of the government, where under the cover of night, we tend to get these sort of executive orders that are really, really vague, but again, problem, reaction, solution. There just so happens to be a problem that encourages a reaction, such as placing gas in plastic bags, and the government has the solution to it.
Right.
That when we talk about cryptocurrencies and when we talk about moving into the Great Reset, if you watch whatever happens on Davos, the governments of the world are slowly trying to maneuver their way into central bank digital currencies, CBDCs. And I personally believe that one of the mechanisms that they needed to introduce these CBDCs is a way to legally go into accounts and research accounts and to keep track of accounts in order to have more control, okay, over the money. Because as you saw in the video, Bitcoin is not anonymous. Whenever you want to search up a Bitcoin wallet, whenever you want to see a currency or a digital dollar go from A wallet to B
transactions, right?
It is visible, right? Now, the only weird thing about this whole situation with the pipeline is that they were able to go into the account itself, into the wallet itself, and take the money out. I have a lot of questions about that. Because for one, if we actually look at what's happened in the news seemed to know a lot about the group behind the attack, even so much as saying the people who orchestrated the attack went into hiding. Now, included within that, we have found out today that the FBI has been operating an encrypted messenger app that has had somewhere around 200, I want to say 200,000. I may be kind of off on this. I don't have the article right in front of me. But the important thing about it is the FBI has been an operation of an encrypted account that has been used worldwide, that they recently as in it's just been reported today that they have made arrests around the world because certain people have been using this encrypted application to do illicit activities. Now, that all sounds conspiracy theory, but when
Not to me.
there are certain connections that you can make between the central bank digital currencies, the attack that we've seen on the Colonial Pipeline, and the level of control that is going to happen. And I say is going to happen because we are eventually going to move to digital currencies that the government has granted itself along the lines of getting everybody to use these digital or central bank digital currencies. I need to separate the two. I need to separate the two in two ways. One way is saying the central bank digital currencies and cryptocurrencies. They're two very different things here. But when we look at it, it seems like all of this has been a plan to at least get a legitimacy on the tools and operations needed to identify a person's individual name and being able to track that individual name's wallets and its transactions from person A to person B. Now, looking at the whole entire situation, Colonial Pipelines is just the beginning of the whole entire situation, right? When we look at this, we are also looking at what's being produced by Davos. I forgot the group's name, but if you're a part of the Crypto Dons Facebook group or any other social media that we have, or if you're familiar with this subject or with this topic line, you will know that out of Davos came the statement, "You will own nothing and be happy." This is all leading towards that kind of system.
Gotcha. And see, just listening up to this and researching this, what do you think about the, the two parts of this situation? Because, on one hand, I'm hearing how it is problematic how the government, is able to access people's wallets and things like that. But then on the other hand, I'm hearing that this can make some people happy because it's leading towards the regulation of cryptocurrency, which some feel will push it to be more widestream or mainstream use. Like, what you feel about that?
I feel that you can never truly regulate the whole situation. You may be able to identify a single individual's wallet, but that is separate from the regulation of it. Of course, when we start to deal about regulation, that's regarding rules. One of the major rules that we have seen along the crypto space would be the KYC regulations, which is a regulation that you need to have if you want to operate any type of financial brokerage type of situation. KYC, know your customer, is a way that, or is an operation or a platform that was used in legacy finance, which was more of the banks, because the government wanted the banks to give them heads up on any type of auspicious transactions, right? This would be transactions over $10,000, or you start to see wires $1 million here or $1 million there.
Right.
Notify the government for those type of situations. We have recently seen the same type of regulations hit the cryptocurrency market, and by this hitting the cryptocurrency market, it automatically makes it not anonymous, right? And I say, yes, it's bad to have somebody constantly track if you purchase a Coke or if you purchase dog treats. But at the same time, when we look at a crypto, this goes back to that dichotomy that I put between the CBDC and the cryptocurrency. Now, they will have more regulatory control over the CBDC, but when it comes to the cryptocurrencies, they will have less control over that. They may be able to flag a certain transaction within the network, but they will never have 100% control over the entire cryptocurrency market. CBDC, that is central banks, that is the government. Of course, they can control that as much as they want.
Right. Absolutely. And some people are speculating that this latest news is one of the things that have to do with the recent dip within the cryptocurrency market. And I know some new investors are, as usual, everybody's in when, things are riding high, but whenever there's a pullback, people, start running and things like that. Yeah. So, I saw you had spoke on it the other day. So, like, what's your opinions on, this current pullback, dip, correction, or whatever you want to call it within the crypto market?
Most definitely. So if you have recently invested into the cryptocurrency space, especially Bitcoin, I don't honestly see who would invest in Bitcoin right now.
Right.
But if you had invested, say as recently as January 1st, you're pretty much in the red. So the cryptocurrency market has taken a huge dip. But again, this was Bitcoin. Bitcoin is at 30,000 now. It was at 40,000. Honestly, when you're talking about returns and when you're talking about that much, it's not the best situation to start investing in Bitcoin just because of its outrageous price. When you talk about value for your money, paying $40,000 for a cryptocurrency that may go to $60,000 is not that big of a percentage gain over something like, say, ETH or Ethereum, which was back when I last checked, this was months ago. I know it's at about like 4,000 now, or it was at 4,000. But back when I had originally checked and did all my research on it, it was around $2,000. So you can definitely see the difference in percentage gain between the 40,000 to 60,000 and the 2,000 to 4,000. But when we look at Bitcoin, we've seen lots of institutional investment within Bitcoin, and this is something that I did catch on to a very long time ago. If we look at Bitcoin's price action over the past 3 or 4 months, Bitcoin has been trading almost similarly to what you would see a stock doing, and that can only be because you have the same players that are
institutions.
Yes.
Mm-hmm.
those are the only people that can keep Bitcoin in such a range to where it really didn't move for 4 months. And you contrast that to some of your altcoins. Well, institutions aren't going to get involved into the altcoins as much because there isn't more institutional backing underneath those altcoins. So what we see with those altcoins is more of a everyday Joe and Jane type of investor or speculator behind those. Therefore, we get those larger price movements because nobody really knows how to evaluate the value between those. So when we talk about Bitcoin and its decline at the moment, is it? I personally see Bitcoin going to 10,000 at this point in time. But does that mean it is a point in, is it at a situation to where you just disregard it? No.
Nah.
Personally, when I ever give anybody any advice into investing in cryptocurrencies, doesn't matter if it's Bitcoin or if it's thousandths of a penny altcoin. I always say have that number in mind that you ultimately want to invest per month. So if you want to invest $300 per month in Bitcoin, you hold that $300. You don't invest it all in at one time, but say you might buy into the market 2 or 3 or 4 times a week or a month. And that's how you're going to divvy out that entire pot of money that you're wanting to spend within the cryptocurrency space rather than just dumping it all in there at one point in time.
Yeah, absolutely. And this is just the very first one, man. Y'all, saying I'm so excited that we finally got here. Salute to the Don, saying just for pushing me, because y'all know I be all over the place. Saying salute to him for making this happen. Because in the future show, or future conversation, I definitely want to get your advice or your opinions on the best ways to go about purchasing cryptocurrencies, because I know that's kind of like a common question that I get, but that we we're not going to touch on that today, but I know that that's something that's really burning, because it ain't just like saying you show up and buy, you have to go through here and go through there. But with the time that we have left, I wanted to have this conversation that you personally, I've seen you speaking a lot about, and outside of you, I'm one of the nerds that watch CNBC and all these other things. What I'm saying? So I hear about it, but just in general conversation, I don't hear a lot of people talking about inflation. And what I'm saying, I consistently daily see you talking about inflation and talk about some of the things that are going. I know that's the economic mind of yours. But you recently had shared with me an article about Deutsche Bank warning of a global time bomb coming due to rising inflations. Could you just build on that for a little bit, brother?
Yeah, so whenever we talk about inflations, we really want to pay attention to what's happening within our governments and our central banks. These are going to be the places which inflation actually starts. Inflation actually acts within the economy on a lag time. That lag time may be 3, maybe 6 months before we actually start to see inflation actually appear in the economy. As of recently, because of the not only because of the money that's been injected into the economy, but also dealing with the virus situation. Inflation is really at a point in which it hasn't been since about the 60s or 70s. And when we talk about inflation, we have to look at not only the cost of goods, but the labor input. And it's really just been the labor input that we've been missing within the economy. That labor input has been missing for a couple of reasons. Number one, they shut down the economy. They said the virus was so bad, it was so highly contagious that people just needed to sit at home and and pretty much wait on either unemployment or one-time government checks. Now, it's within these one-time government checks in which inflation actually comes to the head. Now, we have been in other recent recessions, of course, the most recent one being 2008. We have seen quasi-inflation set in, but this inflation has only been in asset prices. And the reason why the inflation from 2008 was mainly in asset prices is because of how they decided to divvy out the money. When they decided to print money in 2008, it was trapped within the banking system, meaning that the money didn't get to individuals' hands as much as it has today. When we look at what's happened today, or let's say 2020 to today, we have seen a direct cash injection into the pockets of the citizens. Now, it's this type of money printing that contributes to the type of inflation that we are seeing today, and that we'll see going further into the future as these types of taxpayer or citizen payouts continue to happen, because they will actually have to continue to happen. So the more money that you dole out to your citizens, the higher inflation will actually become. And that's because unlike with money being trapped into the banking system, when money is trapped into the banking system, it goes into whatever those banks are placing their money into. And banks are going to be placing their money into stocks, into assets, into
Right.
bonds. But when we give money to individuals, what we see is more money chasing less amounts of goods. And this happens to go back to the labor situation that we have, or that we've had. So where it's not only chasing house prices, it's not only chasing home prices, it's not only chasing used car prices, but it's chasing those everyday prices that we see at the grocery store or at the home improvement store. It's chasing those everyday consumer items, which as we are at this point in time with the low labor that we have in the country, we have low output, but we have high demand for items. And whenever you have a high demand for items and a low output, you run yourself into supply shortages. And it's these supply shortages that contribute to the higher and higher inflation that the Fed is actually trying to aim for.
Mm, mm, mm. So I mean, do you see the is it a bubble? Is it a crisis? Is it going to correct itself or?
So it's a bubble in the terms of the way that you look at it, right?
Mhm.
Now, with the type of system that we're in at the moment, Biden has talked about he wants a $4 trillion government spending bill, which means he wants a $4 trillion deficit into 2022. As long as we're printing out deficits, we'll continue to have bubbles. That's saying that the current bubble that we're in right now is in no danger of popping unless they're willing to take the money out of the system, right? And by taking the money out of the system, this will happen via taking away stimulus checks, taking away unemployment, not purchasing bonds, et cetera, raising interest rates. But this is why I say the bubble won't pop. The bubble will stay inflated because as they begin to raise the interest rates, right, they're actually raising the interest rates on themselves. So if Biden wants a $4 trillion deficit spending coming 2022, do you honestly believe that they want to pay a 0.25% interest rate on $4 trillion, or they want to pay a 0.75% interest rate on $4 trillion, or do they want to pay a 0% interest rate on $4 trillion?
Zero.
Zero all day.
Right.
It's
Right.
you.
Right.
Later on, as we have more shows, I'll start to incorporate more charts for you guys, so you guys can actually visually see that there is actually a limit to how high interest rates can go at this point in time, and that's really truly because it's like a snake eating its own tail at a certain point. Once interest rates get so low, it becomes a point to where you cannot raise them at all without increasing the financial strain on your government. To where right now we're sitting at 0.2, no, we're sitting at 0% to 0.25% interest rates. I believe they won't be able to even get to 1 point or 1% interest rates here, just because the amount of debt that's in the system, and 40 years of lowering the interest rate and increasing the debt, that is horrible. Now, going into the 60s and 70s, we did see high inflation and high interest rates, but we were not starting at a point in which we have $11.5 trillion of corporate debt on the books. Right? We raised interest rates on $11.5 trillion, not on the government, but the businesses that support the gross domestic product of countries. We can't raise interest rates without having majority of the well-known household name companies going completely bankrupt.
Wow. Man, hey, that's some heat, bro. Yeah, man. Well, man, this is, like I said, the very first one, man. We got more to come, man. Man, I want to give you the floor in the end, man. Just to
we can run for longer if you got time. I know we said 30 minutes, but I mean, I didn't expect
yeah, we a little over, but man, we gonna keep these, you know what I'm saying, nice and concise. That way, you know what I'm saying, we could, make sure that we keep people interested and keep people coming back, and that, you know what I'm saying, they'll want to watch the whole thing.
No problem.
But I did want to give you the floor to just talk about some of the things that you're doing to educate the people through the Facebook group, and then also let people know where they can find you on all the other platforms so that they can support you.
Bet. So this video is going to be uploaded to my YouTube. I try to keep all of my social media pretty easy to read. Fortunately, I do have a very common social media name. In some circles, it's Robinhood FX. If you go to my trading view, of course, it's Robinhood FX. If you go to our Facebook group, that's going to be the Crypto Dons. We're going to go ahead and put all of this into the description down there for you. In terms of everything else, I know I don't want to scare you away from cryptocurrencies. And I say that just because of the simple fact that this is going to be the system in which governments decide to move into. What I really want to do for you guys is I want to introduce you guys into cryptocurrencies, get you guys familiar in those while we still have time to take advantage of being an early adopter into the whole situation here. Because again, as countries have to keep on going, of course, it's life, we have to live. We will eventually adopt cryptocurrencies. And you guys definitely need to know the difference between what's going to be a CBDC and what's going to be a cryptocurrency here. Now, when we talk about cryptocurrencies and not CBDCs, cryptocurrencies for businesses that is going to be one of the main reasons why I'm doing what I'm doing. Right now, we're pretty much dealing with governments that are plainly saying to us that even though you may not be able to pay your apartment note month to month, or you may not be able to pay your car note, or you may constantly be in debt. We are pretty much forced upon a government that says that inflation is too low. So if you go into the store right now and you notice that the normal items that you buy have increased from, say, $100 a week to $125 or $150 a week, please understand that the government is saying that by saying inflation is too low, that they're saying the money that you're spending in the store to buy that inflated basket of goods, you can purchase too much with that. They want you to actually be able to purchase less with that. So what they're calling for is not only an increase of $25 to $50 to your weekly basket of goods, but they can very well be calling upon $100, $200 of increased cost to your basket of weekly goods. Now, when we're dealing with cryptocurrencies, this is actually alleviating the situation from that, because when we deal with cryptocurrencies, we're dealing with a form of value that has a positive interest rate, right? Rather than a negative interest rate. When you work 40 hours a week and you purchase you get your paycheck, you go to the store, you purchase that food for a week, and it costs $25 more than what it did last week. That money that that time that you have just spent, that 40 hours that you've just spent working to get that money to actually be able to purchase less, that's no bueno. That's not good. You feel in your core that I've worked the same amount of hours a week. Nothing about my hours a week have changed. Nothing about my time on this earth has changed except the value of the currency. And that's because since they want inflated inflation, that value of the money drops. This doesn't happen with cryptocurrency. What we're seeing with cryptocurrency is that you are making a nice rate of return on your savings, meaning that if you buy a cryptocurrency at a certain price, you are getting a certain rate of interest between that. Now, you may say, oh, well, Bitcoin has gone from 60,000 to 30,000 in 2 weeks. That's a perfectly valid assumption or question or disregard to make within the system. But you have to understand, within a free market economy, an economy that is not bounded by any rules or regulations, that happens. Now, does that mean you should run away from that type of system? No. That means you go to that type of system, because at the end of the day, when we look at how money is produced, Bitcoin has a finite amount of Bitcoins. Whereas when we go to the government says we need a $4 trillion we need a $4 trillion deficit to give to A company and B company and C country, because this is what happens whenever we decide to spend money. We ultimately end up giving money to the Jeff Bezos, to the Elon Musk, to the Bill Gates. Ultimately, the money goes to them. This is why we need to adopt cryptocurrencies not only as an investment, but as a form of payment. Because as long as they're free, we're able to decide the price of that currency. And when I say we, I mean we as not a country, but as an entire civilization that is able to decide the value of that cryptocurrency rather than a central government, a federal government saying we are going to raise the future price of money by 1% or 0.1 or let's say 0 or 1.25%, or 0.025%, whatever it may be. The central banks, they're not in control of cryptocurrencies in terms of their interest rates and their value. Whereas when you take out that paper dollar bill, that paper dollar bill is not owned by you. It is owned by the Fed. The price of it is set by the Fed.
Piece of that, man. And to that point, what I'm saying, just on on the savings, if you look at Bitcoin this time last year, it was like right under 10,000. And so, like you said, for anybody that may have came in recently this year, yeah, you may be down, but for anybody that was holding obviously previously, but just looking at within a year's time frame, to go from 9,700 to currently be at 37,000, is not a bad return on your money, man. Well, man, we're gonna do this again, man. I appreciate you, brother. It's your brother Atum Ra. You can catch me on melanatedilluminated.com. Make sure that you support us both on Odyssey. Look up Robinhood FX. Look up Melanated and Illuminated. Tip us in some of that crypto. Like the brother said, man, we got businesses that accepting crypto coming. We got more bounties going on. And yeah, man, we just want to make sure, man, if you're interested, get down on Facebook, search the Crypto Dons, and if you can make it through the gauntlet, we will let you in. But man, it's all types of information being shared. We got bounties, man. We giving away free crypto. You know what I'm saying? You can't even beat that. You know what I'm saying? We giving away free crypto, man. So man, it's your brother Atum Ra with the Don signing off, man. Peace to y'all.
Have a good night.